Rashad Green here, your local realtor, and I'm here with
Patrick Brill with Empire Financial.
here's a couple things that you should know before buying a home. What's the difference between being pre-approved and pre-qualification? Why does it matter?
All right, so it matters because a pre-qualification is basically when a lender takes an application over the phone, you tell them their income, their assets, what you think your credit score is, and the lender will pretty much tell you what they believe you qualify for based on the information you've provided. Pre-approval is better because I'm actually going to pull the credit, ask them for the documents to prove their income, and that way I'm comfortable giving them an approval that says they qualify for this amount based on their income and assets and credit situation.
All right, what is the steps or process of being pre-approved?
My process is pretty simple. I like to go step by step. I usually have them do the application first so that I understand what's going on, know their income, their employment situation. At that point, if everything checks out, I'll pull their credit. I need to see what their score is, what debt we're working with. That'll help me determine how to structure the loan at that point. If everything checks out with their credit, I usually ask for the documentation to prove the things that I reviewed, like their pay stubs or their W-2s, their bank statements. At that point, I should have the program figured out and give them a number of what they can qualify for, and then you guys can do your home shopping.
So what about the people that have no credit or bad credit history?
So there are options for people that have no credit or bad credit history. Any scores below 580 will require a 10% or more down payment.
What about our self-employed buyers? What are the options you have for them to be pre-approved?
So sometimes self-employed buyers will not show as much on their tax returns that they earn, because obviously the more they earn and they show on their tax returns means the more taxes they have to pay. We have other options such as bank statement programs. That is where they'll provide 12 or 24 months of bank statements. Or if they're a 1099 employee, we have programs where we just look at the 1099s to determine their income. So I always encourage people that are self-employed, if you're able to qualify off of 1 or 2 years of tax returns, to go that route, because you'll get a better program and a better rate.
What are the options for investors that want to invest in property?
There are several different options for people that want to purchase investment properties. A very popular one right now is called DSCR, which stands for Debt Service Coverage Ratio. They look at the market rent for that property and determine whether that's going to cash flow, meaning that it gets enough rent to cover the mortgage payment. There is a ratio with that. Sometimes it can, there's some programs that allow for less or more. And that dictates, down payment and rate as well. There's also no ratio program where income is not factored at all. As long as they have the down payment and the credit score, can buy an investment property or even a primary or a secondary.
What about the buyers that have good credit and income, but maybe didn't save up for the down payment?
Down payment assistance is available. There's several different options of down payment assistance. Some of it is forgivable, some of it is not. There's 3, 3.5, 4, and 5%. Some of it will cover the down payment. Some of it will cover down payment and closing costs.
What if they own the home already?
That's not a deal breaker. Sometimes there are down payment assistance programs that say, hey, if you're not a first-time home buyer, then you can't. But we have products and programs that allow for you to get down payment assistance even if you have owned a home before.
At what point should a buyer start the process of getting pre-approved?
I always recommend starting at least 2 months out. A credit report is good for 2 months. You have to give yourself time to not only qualify, but you also have to remember you got to find the home. You have to get an accepted offer, and then we need time to close it. We can close loans in a matter of weeks, but you don't know how long it's going to take to find the home. You don't know if something will come up with the inspection, appraisal. You never really know. Every situation is different. So a good rule of thumb is a 2-month window from the time you're trying to start to the time you're trying to close your home.
Now, if you have any more questions on how to start or how to become a homeowner this year, feel free to contact us.